So hopping into the charts here, guys. All right, first and foremost, well, if I take this off, it's a little bit distracting. First thing I need to get on here and talk about is the fact that we have our eyes down here, here, and here, yes, but let's take this off for a second so we're not staring at it. Looking at it, we have this very, very large drop down on a Wednesday. Okay, and I placed a lot of significance on this due to the high that was formed on Tuesday and the SMT divergence within ES and NASDAQ still was able to clear buy-side liquidity above the short-term high here on the daily chart, right? All this stuff coming together, immediately, my eyes are going right down here, first and foremost, okay? But it goes back to the same exact notion that I tell you guys over and over and over again. Anytime we have highs like this placed in, okay, at significant price points on a very deep premium, and they drive it down, what's going to happen? A lot of people are going to want to try and pick tops off the gate. Okay, so even though on a weekly profile standpoint and a price action standpoint and all that stuff, it would make sense to have a very deep sell-off, and we still could. But at the moment, I just need to be a little bit more wary and understand we have these highs above us, and price has a very sharp reaction. If I go to the daily chart again, after sweeping this first short-term low here, and then if you take a look at this down candle here, that is a propulsion block. So if you extend that to the right side of the chart, okay, you see the sensitivity on that. So immediate response off that, sharp rejection, filling in basically more than half the range here of the down movement. And if we go to the hourly chart, actually before I do that, let's take a look at ES. Okay, just to compare and contrast. All right, so we have these highs placed above us. We come down, sweep that first. You see these three clean daily lows here, sweep that. And if you take a look, we come down and we actually touch down into this bullish order block right here. Okay, same thing I showed you on NQ. Severe sensitivity on these price points, immediate response away from that. And I can't just completely close the door to seeing another buy side liquidity run prior to a large sell-off. Okay, with that said though, okay, inside of this range that we created now, all right, if I start out in NASDAQ, immediately what I'm seeing is, okay, here's midnight opening. We trade above midnight opening. We're going back into this old new week opening gap, okay, because fair value has been yielded. If we take previous daily high, or sorry, right here's previous daily high to down to the previous daily low. We're right in the middle of the sweet spot, so we're opening in a very deep premium. So opening is about 2 minutes, and we're opening in a very, very deep premium. We priced in between 62 and 79% retracement. That's our sweet spot. We drive up, clear this short-term high right here. We're now having a change in state delivery after that, below this up close candle. And what my eyes are reverting to at the moment is this discount sell side liquidity pool right here, right at equilibrium. And then right below that, we have a rather prominent new day opening gap. So we have a sell side liquidity pool right here with opening in a premium. And we have fair value acting as a magnet down here. So before I continue, Harky 762 Jargons Lax, good morning to you guys. It's great to see you back as well. And with that said, okay, let's go down to the 15-minute chart. Okay, these lows down here become a little bit more prominent, and you can, reasonably see and want to see these swept. So below that, I'm just going to go ahead and, well, if I can stay on the page, that is. I'm going to go down to the 5-minute chart, and I'm going to go ahead and map out new day opening gap. Okay, so right here. Here's the previous settlement daily closing. So this is our true close of yesterday, which yields fair value. Here's our true day opening right here. Right here. In this range, we're going to go ahead and extend that out. Understand that it's going to act as a magnet pulling price. And we know because we have this down here, this makes these lows all the more high probability to be engaged. Okay? Because we have a key magnet on price below it. So, honestly, perfect. We're now cementing intermittent term high. So we're showing bearish market structure going into the 9:30 opening. So we have a swing high here, lower swing high to the left, lower swing high to the right. And now we actually have displacement to the downside in the direction of the lows as soon as we open at 9:30. All right. So that's perfect. So we came down, swept these internal lows here. I'd like to see if we can continue. Let's see what ES did. Okay, getting very close. So same exact thing that I mapped out on the NASDAQ. We're looking at ES here. So let me actually... Alright, so to no one's surprise whatsoever, we deeply expanded to the downside. Now, as for 8:30 opening, okay, we come into it, not really interested, okay, it was just in a consolidation. And, just a whipsaw opening there. So I wasn't really interested in trying to engage with the 850 to 910 macro. So in that case, as regularly scheduled, we'd be waiting for 9:30 opening. All right, so perfect delivery up into this 1 minute fair value gap. I would anticipate this to hold and complete the move down below the sell side here. Okay, so as I say that, I'm obviously not going to jump in here on the try to hop on the train and short it, right? That'd be foolish because we're in a very, very deep discount. But let's say that this sensation was somewhere up into the premium in the range. Okay, then yes, of course, I'm going to short that for value gap and aim for the low. All right. Sebastian, yes sir. We have PMI at 9:45 a.m. So, absolutely, certainly another thing to consider is the fact that we have PMI, red photo high impact news, in about, what time is it? 5 minutes. So 5 more minutes we'll have that news driver. That's when price is likely to be manipulated, and that's why we wait for that. That's why we remain calm until that takes place, because we understand the real move, it's never going to happen before the manipulation. I mean, 99% of the time. 99% of the time, you're going to want to wait for wherever that news driver is, wherever the significant time of day is, and understand that's when price is likely to manipulate. And you don't want to be in the marketplace when it's manipulating, because there's no edge in that. Okay, you want to be in the marketplace after manipulation has served as due diligence, okay, and set the stage for a setup. So, I mean, right off the gate, we call that to perfection. I mean, in my opinion, it was very, very easy to see that. Um, we'd have this drop down to these levels that I called out as soon as I hopped on stream. But, just kind of hanging around at the moment. I think we're good to go here. Alright, guys, so we're back. See what the PM session has to offer for us. We're back better than ever. So as for the AM session, okay, we had ourselves an erratic sideways consolidation. In the chat here, I can see, ironically, right after, I close up, it slams to the downside. But what I'm seeing here now is, okay, I believe we traded to just about 60% of the range. So let me confirm that. So it looks like we tapped 62% retracement level. Body is significantly above that. All right. So we have an optimal trend entry priced in. Let's check out NASDAQ. Okay, NASDAQ obviously showing relative strength. Down to that short-term discount. New day opening gap delivered beautifully. Then we go to the 15-minute chart. Okay, no wick left behind. Perfect. All right, 5-minute chart. Very large influx higher here on the NASDAQ. Okay, so to me, this looks like just a nice run up into all the highs that were placed in here yesterday. So eyes are up here. Let's take a look here. So we come down, bump this short-term low at the new day opening gap low. Huge displacement to the upside above this swing high here, above all these consecutive down candles. I'll anticipate price to hold these, and then obviously come to the highs up there. So, how do I deal with temptation? Dragon's asked. So that's actually a great question. To be honest, this is something that myself, as well as many other people, struggle with on a day-by-day basis. But it just comes down to, like, you do it, you give into the temptations, and you fail, you lose this trade, and it's like, finally, one of these days, you just have to come to senses with yourself, like, okay, well, this is obviously not working out for me. If I have to second guess the setup, I'm not taking it, okay, and I stuck to that. If I have to double, triple check it, okay, I'm not going to take the trade, okay, the answer is no, okay, so when in doubt, the answer is no, but when you're very, very certain, things are very, very obvious for you, you're going to be taking it, okay, so it just comes down to, like, how willing are you to actually make that change and adjust and stop making the same mistake, right? So over the years, I could just, see the setup. It's a shiny object. It's staring you straight in the face, and it looks like something maybe might be there. It all just comes down to the narrative and context to the higher time frames, okay? So if the narrative and context isn't all that there on the higher time frames, but then you scale down to the lower time frame chart and you see, oh man, breaker for value gap, everything's clean, and then your second get, like, just don't take it. Okay, so a higher time frame always has to align with what you're seeing on the time frames where you're looking to take the trade. Okay, but you know, it just comes down with experience. And really, I mean, to be honest, the most plain answer I can give you is just trial and error, right? So you just fail continuously doing that same thing, giving them that same temptation. And then one of those sessions, like, oh man, all right, that's that same temptation that I feel every single time that I lose. I'm tired of that shit. I'm not doing it anymore. Okay, I'm not taking it. I'm sitting to the sideline. I'm gonna wait for my model to reform and something obvious, right? So kind of just sifting into that mindset uh, is really the best answer I can give you, because that's literally how it went for me. So I can't speak for everyone, but I can speak for myself and what has led me to obviously very respectable returns. So um, I should, now that I'm on that topic, I almost forgot to inform you guys. So basically, I'm going to be posting a video for you guys. Basically, just going to be overviewing the top 5 uh, keys to success that you need of, you know, beating the prop firms and actually getting payouts. And I'm doing this in celebration of me reaching over $20,000 in payouts for the year of 2024. So, you know, it might not sound, you know, insane to a lot of people, but I think I'm very, very happy with the $20,000 in payouts this year over. Honestly, like when I'm looking to engage with the PM session, the closer we get to 2 p.m. is more times than not going to be our highest probability trades. So, it really all just depends with time and price aligning. Like sometimes it'll be the move will start early. You know, sometimes we'll be taking a trade right at 1:30 p.m. or, you know, sometimes we're going to wait until, you know, 1:50 to 2:10 or even 2:30 p.m. So it all just depends, okay? But all I know is the closer we get to that 2 p.m. macro, things are usually a great deal more high probability for the PM session, all right? But as for this AM session here today, guys, okay, I just showed you guys everything just now. We have an optimal trade entry priced in. If I look at I'm going to go to the daily chart quick. So I want to show you guys on the daily chart here with ES. We actually worked right down into almost to the tick, but, you know, close enough. You know, we're in the vicinity of midpoint of the wick. This to me is good enough. We worked in majority of the wick of the upper quadrant, okay? And now we obviously have a very large displacement away from that, all right? As for the 15-minute time frame, immediately after delivering all the internal range stops. So remember, I brought your attention prior to closing the stream to the Asian resistance and lows. That was delivered beautifully. We have that coupled with an optimal trend entry, and then immediately have that change of state delivery on the 15-minute chart. So I do believe this will be setting the stage for run up into the highs here. But like I said, I typically, you know, when considering time, I always tell you guys time is really what, you know, glues and sews everything together and brings the setup to fruition, right? As high probability. So the closer we get to 1:30 p.m., 2 p.m., things will be a lot better. But anyway, notice how we're working on this 5-minute balanced price range that I showed you guys. So if you go to the 5-minute chart, you'll see that this is a balanced price range extended out. Look at the bodies at the low end of that, coupled with this 1-minute fair value gap right here. So that's actually nice to see. So I like the displacement here. I like how we're dropping down into this 1-minute gap, coupled with the balanced price range, respecting that several times. Moving away from that swing low. Let me check out here. 5-minute chart, we're actually delivering half of this wick. And as for ES, honestly, to me, ES looks like it would want to dive down into this 5-minute imbalance coupled with this breaker here. That would be preferred. And then I you know, at the same time, I kind of look at this short-term low and I'm like, okay, well, you know, we have this very, excuse me, we have this very large move higher. As soon as we see that first short-term swing low form, you guys already know to deal with that. What I've been telling you guys for years now. As soon as that happens, stops get absolutely jammed below this low. So a lot of times you'll see that little mini stop rate below that and then continue. You know, retail formation forming up. I would consider this as a buying opportunity. I would buy this if, let's say, this low dropped down to the breaker and swept the short-term low. But whenever I look at this, I just know, like, yes, this could pan out, but a lot of times you'll see price slide down and take out that short-term low and then continue, especially with us being in the, heading into the macro here. Now, when I am looking at it, remember, okay, Model 2 tells us what? This is the high that we want to see be ran out, okay, on ES. Here's the low. Do these two down close candles, are they formed right at equilibrium? Well, if you look at the very low end of the consecutive 2 down candles, you'll see that this right here, the very low, was formed right at equilibrium. So this here would be valid. Should we have a very large expansion away from it, create a gap, trade back down into them, we expect that to act as support. We look to buy that and get up into the highs. All right, so I'm very curious to see what we'll do here. All right, so let's say, honestly, I really wouldn't be surprised to see this thing bump out these short-term lows first and foremost. Okay, if we didn't have these down here, I would have no hesitation to buy in on this thing right now at this moment. So one subtle change in price action here, I will say. Okay, let's say that price right here dropped down below the short-term low and then ran up and then back down to the 5-minute down close candles. Buying that stop loss right below here. But if I be buying in on this, I'm just putting my stop loss below the liquidity pool that a lot of times has ran out. And classically with traders with their stop loss jam below these lows. Okay, so let me see here. Okay, NQ kind of drops down in the middle of the consolidation, comes right back up. All right, so we traded to about 25% here on ES. We're touching new day opening gap high once more. As for NASDAQ, slid down to midpoint, hanging around there. Okay, here's that balance pressure into the 5-minute chart. So, like I said, I would have bought in on this if it weren't for the fact of these lows being placed down here. So, anytime I see that, it's a very crucial aspect to me filtering this in or out as a high probability long setup, and I just simply can't ignore this down here. Even if it were to pan out, like if I come back in hindsight, think, okay, it actually worked this time. I know that more times than not with my system, it would dive down here at least on one of the averages and then slam higher. All right, but anyway, I said the ES. We do have a breaker on ES. Okay, we have sell side lows down here with everyone their stops. Just think about it for a second. We drive up significantly. We're not even at 1:30 p.m. yet. We create a low, create another low, create a low here, higher low, higher low. What's happening? Every single low that's created, there's sell stops being jammed, jammed, and jammed. So even if this thing really does just slam to the upside, right? I'm just going to be anticipating once we reach the high to do what I just said it would do here. There's ES slamming to the upside. And there we go. There's NASDAQ pushing through. So the market would now be flooded with orders. I still would like to see price drop down here. If it does that, guess what? I'm not expecting this thing to stop here, right? This was just the internal draw that we're looking at. Okay, realize that. I would like to see price draw up into this new week opening gap, as well as this 830 high up here. All right. So yes, not quite there yet. So we absolutely 1000% have unfinished business to the upside on both ES and NASDAQ. Okay, so like I said, I wouldn't be anticipating a reversal here. I would be anticipating at the minimum, our stop rate on the short-term low, and then continue to this 830 news rate high. Okay. So this right here is going to be our time-based liquidity pool. I want to see this 5-minute candle be strong and close away. Okay, it's hanging around, kind of back and forth, but so far so good with the remaining green. So I want to see this thing actually slam to the upside in direction of this high. And from there, next point of interest, so you can call it, it's going to be up here. All right. Okay, nice respect to the down candles here on ES. Perfect, beautiful. Okay, drops down to the 2 down candles, slams higher. Okay, that's exactly what I wanted to see. Now what we have here is, okay, respect to the down candle, trades up. Here's new week opening gap. Here's the highs. I want to see this thing expand above aggressively and complete the move. Okay. So I want to see if I can just, at the very minimum, tap into this inversion gap high here. Okay. And I'll go ahead and buy that. Okay. So I like the initial reaction off there. Stop's going to go below this down candle. Okay, didn't get the exact fill I wanted, but as soon as I see an institutional order fall up off that, okay, that's exactly what I like to see. So stop loss right below the inversion gap here. And we'll hold it, submit to it. Everything that I wanted to see in price is there. Obviously not the preferred fill there, but that to me is okay. All right, so tapping down in the inversion gap high. Okay, trading out this down candle. And, yep, that's too strong for me. I think I'm going to close this. I want to see how it's trading to the opening there. It's a bit strong for me at the moment, but I want to see this thing really wick off aggressively. Okay, but ES is too strong. I'm going to cut bait there. Okay. So I wanted to see us act as institutional order flow right at this high here, but then, okay, it drops down there. I'm like, okay, all right, drops down on the second candle. That's a little bit, And then it drops down a second time. I'm like, okay, well, it's time to dead the trade. Okay, rather than, being ignorant to what's underway here. We understand that ES came up, swept this high, aggressively trades down, body closing below these down candles, and now it's displacing off. Okay, so instead of letting it come down for the full take profit, I know exactly what this thing should do if it's going to be high probability to the upside, and it's not this. Okay, so I'm going to cut bait on that. So, buying in on here, looking for new week opening gap high. Remember, that was a 1 to 2.5 R. All right, so taking a loss here, that's minus 1 R, right? If I do the same exact RR, okay, that would obviously overlap this transaction here and double that, about a 1.5 R in profit. All right. So yeah, this thing really slowing down here. If we look at the 15-minute chart, okay, we can see that price has actually just bumped up into this old new week opening gap low. Okay, we took this short-term high here, displays off below this 15-minute down candle. So that's a change of state delivery now. Okay, with new week opening gap low. And then I look at NASDAQ. I'm like, okay, well, we swept the New York session highs here. We have an S&P divergence now. Price is displacing off. Trades below the opening of this up candle that created the S&P. Okay, we're obviously, whenever I see all this stuff in a premium, okay, I begin to kind of shift my attention lower. All right, so based on everything I gave you guys in the 15-minute chart, all right, I like the idea of this thing sliding lower now, and my attention is reverting down to this low right here. Okay. All right, so let's see here. Watch this up candle. I wouldn't really want to see. I really would not want to see price trade above this up candle. Let's see here. So, okay, ES hanging around at the middle of that up candle. Like I said, unless this thing's just gonna like consolidate and really just be, kind of go on the theme of New York session. Okay, I would expect and anticipate this to hold here and slam down below here. All right. So up close candle. I think it's good to short this. Okay, I'm going to short that, and this will be the final transaction of the day, because I told you guys, you guys typically never take more than 3 trades in a day. All right, so should this not go in my favor, then obviously it's time to close up. All right, so I'm not going to allow myself to, keep going and going through this price action here, right? So take profit, all right? Take profit is going to be right down here. 15-minute for value gap, sell side liquidity. Okay, you guys already know the context behind this. Trend line stacked up. Huge expansion to the upside. A lot of stops are going to get jammed down below there. All right, you guys know the business. Okay, stop loss is going to go above this breaker here, above the up close candle and above the breaker. All right. Nice. So I like what I'm seeing here. But anyway, up close candle, institutional order flow tells me that this should hold. If it does rally above, it needs to be a very short-lived rally, respect the very low end, and slam down. But anyway, this will be my last trade of the day. Okay, so trading above the body of the up candle, but let's see where this body stacks up here. Depending on where this body ends up, I'll obviously manage accordingly. All right, so we actually just tapped back into this balanced price range low. I need to see a very quick rejection away from this now. So preferred method here would be respecting the up close candle, but trades above that. The body's still within it, so I think that's still valid. All right. Well, I don't think. I know that would still be valid, but the body still being within it. Okay, and then the 5-minute simply just rallies up into this up close candle here. Bullish order block. Or sorry, I said that wrong. Bearish order block. We rally up into that here. Consequent course by the wick. Or apologies. I don't like to use those fancy slapped on terms. It's this just the midpoint of the wick. Okay, so if you ever hear me say some fancy words, just ask me about it, and chances are it's not as fancy as you as it makes it out to be. Okay, trading should never be a complicated thing, guys. Keep your system simple. Okay, moving parts, you stick to it, and that's it. So I mean, this thing, I really want to see it remain heavy here. We bump down the short-term low, come right back up. It looks promising for now, but I want to see if it can act like ES right now. So ES back in the newly opening gap. You know, obviously I'd like to see this thing continue down. And we shall see, won't we? But anyway, works into this inversion midpoint of the wick, inversion gap as well. Touches its bearish order block. I like that rejection of profit, but the key here is, do we continue this? And are we able to complete the run below jam sell stops below here, jam sell stops below here? So everyone, I know the main sentiment is a lot of people want to force some type of buying setup in here, okay? And whenever I see all these signatures surrounding price, okay, I know for a fact that the probabilities will be on my side if I'm looking short and get covered down here. But, you know, like I said, on a day like this, you know, it's a little bit harder to have that preferred precision where, like, we just get on stream, okay, we're filtering out everything that's low quality, then we get on, take one trade for profitable, get off. Okay, that's how most of our days go, right? But when we hit a day like this, it's a little bit more difficult, but certainly navigatable in the form of, like, you know, we're not going to be blowing accounts over here. We're not going to be, you know, scratching our head after the day. It's just simply just one more business day on the NASDAQ. I'll go ahead and move my buy stop down now with this drop down. Okay, because, I mean, if it would rally above this high, I wouldn't be in the trade anymore anyway, because this is now a fractal intermediate term high formed. All right. All right, ES getting very, very close to that sell side draw. See if NASDAQ can dive down there now. And there we go. Boom. Wow, that was like very, very quick. Okay, it was so quick that it broke my buy stop. But anyway, guys, this one trade alone, that was able to overlap this loss here, so brings us back into profit for the day. I mean, the logic was there. It was explained. Up close candle, institutional order flow. We get covered at the sell side liquidity. That's it, right? So it looks like this trade was so aggressive that it broke my buy stop. But anyway, back into the green, guys. All right, not that should be like, okay, well, we're green. We should be, you know, celebrating now. Just understand, like, just like we take the losses, we take the wins. Okay, so are you getting over the euphoric after a win? Are you getting over the, like, you know, beating yourself up over a loss? Like, you know, it's the same stuff, guys. No matter if it's positive or negative. Yeah, I'm content. That brings me back into profit for today. I'm very happy with how I conducted myself through this price action, to be honest. So, you know, I'm here for your guys' benefit. I mean, if you don't like my approach, I mean, I don't look at this from any type of arrogance, but, you know, all glory to God, of course. You know, you look at other groups and they're fueled from excitement and dopamine. What do you think they're doing? I mean, over trading, ridiculous amount of money lost for no reason when they can just simply just be patient. This 15-minute imbalance, nice rejection away from that. Here's a 15-minute bullish order block. I like what I'm seeing here stacking up. I would like to see if we can have a bullish continuation now, to be honest. So, ES drops down to a discount, delivers the fair value gap. Basically the 15-minute gap that Ariel mentioned earlier that we were discussing. We're able to sweep this entire trendline sensation here. Okay, we take out all that sell side liquidity. Then we get to NASDAQ. We see the very sharp rejection away from that. All right, so sell stop's taken, 15-minute imbalance delivered. And then we have that breaker from the 5-minute chart. You extend that out on ES. And then we have the displacement above. So I'd like to see if this thing can continue and break out above these highs here. All right. I think these days are necessary, guys. Okay, I think that if I just come in here every single day, right, and I just take, you know, it's easy, it's smooth. I just take one trade, we profit, we leave the stream, which is typically how most streams go, like I explained earlier. I think days like these are necessary because it's gonna filter out who's strong, who's really here to learn, and who's actually here for the process, good or bad. I feel like it kind of filters that out. And like these days kind of test you, and it really brings you back to reality and just kind of, you know, gets you grounded again, just makes you realize that you're not invincible, right? So that's kind of my mindset on these days like this. I don't view it as a negative thing. Okay, I just view it as, you know, a day that really tests your mental fortitude and really shows, basically exposes, like, okay, does this guy really know what he's doing psychologically, or does he not, right? Now, I would like to see if this thing can push higher above these highs here now. Okay, I'm not going to force this one. Not that I force anything ever, but I'm going to kind of tape read this. So I'm back in a profit for today. I'm content with that. I made my money. All right. I'm not going to try and give it right back whenever it's been a, you know, rough ride today, right? So all this in here. So I'm going to tape read this here. So Drop down to the consecutive down close candles, which should act as a bullish order block. Drops down below the sell side. Expansion for value gap. This should hold in a high probability environment, and then we'd have our eyes up here, right? So like the last thing I would allow it to do is trade down to this second fair value gap. So like if you're buying in on this, you always have to weather your stop for that second fair value gap to be delivered. So you always buy the first one, weather your stop for the second one. Okay, so let's say that we have a sustained body through this fair value gap. Then probabilities are going to drop a little bit. All right, so like how we're hanging around here, I'd like to see us really expand to the upside now. Okay, ES is looking good as well. Notice how it reverts back to new day opening gap, the low end. All right, perfect delivery there. So short-term consolidation at the very high end of the order block that I showed you guys. Gets above that, trades down to the fair value gap, trades down to this one, but all the bodies remain above, and then we expand above. So I'm going to be expecting this thing to continue with aggression until we reach these highs. Okay, so I like what I'm seeing on ES. Perfect, beautiful. And yeah, eyes up here, guys. So I'm going to see if we can complete the run above here now. So classic model number 3 here. All right. Short the up close candle. Anticipate this to remain open. Wicked up short-lived rally, which is exactly what you want to see. Stop loss was above the breaker here. Notice how it tags the breaker here. Very nice sensitivity up off of that. Okay, spikes down. And this sets the stage for the SPY program now. All right, so like I said, I'd like to see this thing be aggressive now until we reach the highs. Excuse me, hypothetical buy. Okay, like I said, I made $700 on the short here. That brings us well into profit. I'm not going to look to give that back. There's no reason for me to trade that whenever I made my money, right? But looking at it here, if I was in this trade, buying the fair value gap, stop loss down below this candle at the very minimum right here. And with this expansion higher now, going above these down candles, immediately my stop goes down below here. Okay, immediately, because I'm expecting these down candles to be held. Sell side has already been delivered here on a higher time frame basis, and order flow tells me we should stay above this until we complete the run above buy side liquidity. Okay, so stop will be basically break even now. Okay, what I'm saying. Stop loss break even, hold your take profit for the highs up here. Okay. So honestly, thinking about it, following my plan, I'm not gonna physically trade this. Okay, because I made more than enough, like I said. Basically, if you missed this short here with us, I'm basically giving you another opportunity to obviously carve yourself out some profit. So I would certainly, if you're using multiple contracts, multiple micros, I don't know what the case is, I would certainly take profits here. Take a partial, stop loss at break even, hold the full thing for up here. So I would take a partial right here at the high end of this fair value gap, stop loss at break even. I would be anticipating this to hold, this inversion gap extend to the right side of the chart. Now listen, what I'm about to show you guys here is very, very powerful. Once again, okay, anytime I'm using levels for you guys live on stream, it's not just some random level. It's not a random fair value gap. It's not a random order block. This inversion fair value gap right here, very specifically, is more significant and important. Why? Well, let's take a look at it. These higher time frame, very key highs here that hold a very large pool of liquidity. Okay. When we first ran up into those highs here, was there a fair value gap formed? Right here. So the fair value gap that was formed, completing the buy side liquidity run, right here, is very, very crucial and a lot more highly accurate when you're referencing it than any other old, inversion gaps. When we trade back through it, that's now sell side delivered, sell side delivered, buy side delivered. When we leave it, right, we leave it here, we expect it to be sensitive. And what does it do? It rallies right back up into it, okay, where we shorted, and then drops down to the sell side. Same exact thing that I'm expecting here should this thing be high probability, right? Gets above it, should act as support. All right, so like I said, me being in this trade, understanding, kind of how today's been, even if it is a clean day, my stop loss is right below here at break even, and I would have been partialed out right here. So that would be from entry, let's say 20,354. So just about 20 handles there. So you'd be paid 20 handles, stop loss at break even, you let the less pan out. So dropping down to this 1 minute gap here, that to me is rather reasonable. Okay, nice. So I'd expect that to act as support and like to see if it can complete the move above the highs now. That's what I'd be expecting and anticipating. Come on, algorithm. Everything looking perfect, guys. Okay, everything in the book that you'd like to see with the run on buy side liquidity is taking place right now. All right. So you want to see this thing really expand and complete the move. Because remember, okay, here's the buy side liquidity high that you're anticipating to be ran out. Here is the low. Wait a minute. These down close candles were formed right at equilibrium. And what does model number 2 tell us? High. You always anchor the high that you're anticipating to be ran out in the form of buy side liquidity in a buy scenario. You take the low that obviously began the sell or buy program, excuse me. Is there down close candles formed right at equilibrium? Yes, they are right here. Okay. This right here, coupled with this Fairvalue gap, is a high probability model number 2. Okay. So if you missed model number 3 here, like literally, guys, the stuff I'm giving you, it ridiculously repeats. Okay. If you manage your risk correctly, understand nothing is 100%. I mean, there's nothing you're absolutely going to rip these markets apart. But anyway, if you missed model number 3 here that we were able to make $700 on, guess what? Okay. You have yourself model number 2 right here. If you missed this entry here. So anyway, once it drops down here, you buy it, stop loss below the down candles. Once you get that expansion above the short-term high, okay, go ahead and put your stop loss right here to break even. And remember, if you caught the better entry down here, all right, your stop, excuse me, your stop loss is still at break even because you took a partial up here. All right, so you partialed out at 20 handles, and then your stop loss moves up to break even. All right, so you're already paid, and you're already, risk is outside of the marketplace. All right, perfect delivery right there. All right, like I said, if you didn't catch the first entry, guess what? Here's model number 2. You see this expansion above the short-term high, and you want to see speed above that now. All right, so like I told you guys, you buy here from entry 6476. Honestly, if you're using one full contract, I wouldn't see any reasoning as to why you couldn't take a partial right here if you're using multiple. Okay. But anyway, you expect speed once we break out above the short-term high in the premium. Okay, it's not just some random. Oh, we broke above short-term high. It should continue, right? We're in the premium in the range. So when we do that, and we have buy side liquidity draw above, okay, you want to see speed above that. So model number 2, originally your stop loss goes down below here. Okay, but as it rises up, you're about 7.4. So about 14 handles in profit. Your stop loss goes to break even, and your take profits right up here. Okay. CS blend, beautiful, beautiful. So I mean, guys, seriously, I can't stress you enough how much this stuff repeats. I already know most of you see the power in it because you DM me with results. That speaks, but it just comes down to it's really like I'm really here to help you out, guys. I'm really here for you to carve out your own income. I'm really here for that. That's the only thing I've ever sought out to do within this group. All right. And absolutely will. Every single thing that I'm showing you guys, whether, it could be a bumpy road. Let's be real. Okay, we took an initial 15 handle loss, and then here we go. Here's a $700 trade. You get it. You just have to be patient, submit to the process, understand there's going to be bumps along the road. And if you can weather that, you're strong. You got it. Okay, there's nothing stopping you. But anyway, anyone that took this entry here, 55. Okay, it's now 30 handles in profit, so we caught 33 handles here, so that's just about the same size here. So if you missed model number 3 here, here's model number 2. All right, and stop loss for anyone that bought down here is trailed in profit about, so your stop loss will be trailed about 10 handles in profit now, okay, for anyone that bought down here. But for model number 2, okay, stop loss is still at break even here. And, when it comes down to, who's really stopping you from taking profit at 33 handles? Come on now. That's more than enough. That's $700. Who is saying no to that? It all depends on how much, leverage you're using. If you're using the micros, that's fine too. But, this price swing right here off model number 2 is more than enough. But full take profit will be above here, assuming you took partials. All right. So really no reason why this thing should slow down now, okay? So this small little short-lived rally, okay, that should be upset right now and slam above. Remember, guys, even if I'm not physically executing on the chart, which I'm doing every single day, it's still going to be there for you guys. I laid out these models for a reason. It's not just some random, slap together, hand-me-down mentorship, right? Stuff that actually repeats in the marketplace. All right, so that's it. Yes, Cedar, it's always a pleasure, brother. All right, so we drop down to this 1 minute gap. All right, so look, this is what I'll be doing. This is how I'll be managing my trade. Model number 2, stop loss at break even. Right here, stop loss 10 handles in profit. You took a partial. All right. I'm looking at this 1 minute for Vega gap, and this is important because we're on the heels of this inversion gap. I need to see this hold, but if we have a body through it, okay, and it closes below, taking your full profit right there. All right. And that's if you didn't actually aim for the first high. So I don't even think it delivered that high. I think it matched to the tick. Yeah, it did. But anyway, there's 33 handles off model number 2. Okay, and I'll be closing full profits right there as soon as I see that body. So I'll be taking profit right there. All right. No matter if you bought from down here or in the down close candles, as soon as I see this, okay, I'm taking full profits, taking my money. All right. Anyway, guys, yeah, I don't know what's up with this. Obviously, my buy stop's still in there. Can't get it off. But anyways, $700 trade. I don't mean to sound repetitive, so I'm going to go ahead and close this up. Basically, just another example of making your winners a great deal larger than the losses. So 15 handle loss here. Okay, as you can see, bought at 20,282. There we go. So right there. And then we more than double that with this transaction here. So I think that's going to do it here, guys. Honestly, I wouldn't be surprised to look back and see the power or do something, but we made our money. We crawled ourselves back into profitability for the day. So great week. And yeah, I think I'm gonna call it here, guys. So appreciate you guys always. Always a pleasure working with you. Model number 3, another one in the books. Beautiful. We're getting paid. And what we're gonna do now is I'm gonna be seeing you guys tomorrow morning. Close the week out strong. And God bless you guys. Take care.